It's certainly a losing battle now for the paper shorts, because the more and more they sell, the longs know that they can't lose. The longs know that they control the physical markets, control or starting to control the pricing mechanism. So there's no fear when that failure to deliver happens. The entire financial system will come down. You'll be looking at, God knows. You could be looking at four-figure silver very quickly. And I always caution, be careful what you wish for, because when the financial markets come down, your way of life will completely change, and it'll go from living the good life to purely survival.
In today's news recap, silver price nosedives below $30 as strong U.S. NFP report boosts U.S. yields. Silver price plummets below the psychological support of $30 in Friday's New York session. The white metal plunges after the United States non-farm payrolls report May showed that labor demand remains robust and the wage growth momentum was stronger than expected. Fresh payrolls came in higher than expectations and the prior release. Average hourly earnings rose strongly by 0.4% from the estimates of 0.3% and the former release of 0.2% on a month-on-month basis. Average hourly earnings data is a measure of wage inflation, which directs households' spendings. Annual wage inflation measure grew by 4.1%, beats the estimate of 3.9% and April's read of 4%. Strong payrolls and wage growth data prompt the need to maintain a restrictive interest rate framework by the Federal Reserve for a longer period, which is a favorable situation for yields on interest-bearing assets and the U.S. dollar. 10-year U.S. Treasury yields rally 4.43%, up by 3.5% from Thursday's close. Higher yields on interest-bearing assets increase the opportunity cost of holding an investment in non-yielding assets, such as silver. The white metal was already under pressure as People's Bank of China's gold reserves report for May showed that their 18-month-long gold buying spell paused for a while. The report showed that gold reserves were unchanged. Now we'll show you more clips of the latest interview, but first smash the subscribe button and drop a comment down below. Let's get back into the episode.
Right. Well, silver is more volatile than gold, and it makes sense because it's a smaller market. And it being a much, much smaller market, it's much easier to manipulate. But going back throughout history, silver moves up and moves down faster than gold does. The problem now, because everything is financialized, and you've got these short positions that are basically being margin called. Yes, silver's leading, and it has been leading now for the last. The ratio's down to 73 from it was over 90 just month and a half ago. So silver's definitely outperforming, and silver is, as I said, I've been saying, is the fuse to the gold market. You couldn't have $100 silver and gold not go higher than where it is now. Yeah, and the real danger is that gold is the antithesis, if you will, to fiat money. It's the anti-dollar. It's real, and the fiats are printed by man. They're not real. They don't have any real value other than the fact that governments mandate that you use their currencies. So you really couldn't have, say, 5 or 10 or $25,000 gold and the fiat system remain as it is. If you had 5, 10, $25,000 gold, you would have interest rates going much, much higher because confidence would be breaking in the sovereign debt that not only does the world run on, but sovereign debt, particularly U.S. treasuries, are the foundation to the entire system. And that foundation is pure, it's a mirage, it's sand. If you go back to what happened during the Depression, you didn't have a system-wide failure because the money was still good. And the money theoretically was still good until 1971 when the U.S. went off the gold standard. Then it's, from that point forward, it's been clown money. I've heard talk of that. In my opinion, the Fed's going to have to go away anyway. I mean, they are insolvent at this point. They've lost more on their bond holdings than what their equity was. So they're an upside down entity lending to another insolvent upside down entity, the U.S. Treasury. And the question is, who's going to lend? I mean, the U.S. can't open its doors on the first fiscal day of the year ever because they've got to borrow, $1.5 trillion, $2 trillion additional just to keep the game going. I mean, it's an obvious Ponzi scheme. And the problem with Ponzi schemes is you always need new money. And the problem is, where is the Treasury going to get the new money to borrow? And it's going to be the Federal Reserve, which is the lender of last and only resort. I mean, you've seen China selling down their Treasury portfolio. Japan is no longer accumulating. It's smoke and mirrors at this point. So from a mathematical standpoint, the Fed is going to go away. And I do want to comment, I don't think it's even a 50-50 chance that we have an election. The math is so bad now in the system, and I've said for years that they would need something to point at as to why the system collapsed. In other words, they need something to kick the table over and say, well, our plans were working, everything was great, except for this. And unfortunately, this looks like it's going to be World War III because the West is pushing as hard as they can to escalate the war. Owning gold and silver on their own does not guarantee your survival. I would say what you need to do is you need to think it all the way through to protect yourself, to protect your family, because no one else is going to do that. And yes, gold and silver are important because you're getting your cash balances, your capital out of the system. And I mean, if you've got brokerage accounts, you want to get those stock certificates. The great taking is absolutely real. Everything was footnoted. Those laws are already in place, and they're not going to put laws in place like what they put in place and not use them. They're going to tank the system. There's going to be banks going under all over the world, brokers going down all over the world, and the mass population is going to be bailed in all over the world. People are going to be left with no capital whatsoever, and then you'll see the population start begging for a central bank digital currency so that they can get a monthly stipend, so that they can buy some bread each month. You really need to think your plan out as to where your location is. Get your capital out of the system. Can you protect your location? Do you have the ability to grow food? Do you have the ability to hunt? Have you stocked up on food? I mean, people are saying, well, you should have, a couple months worth of food. I don't think 2 months is going to be anywhere near what you're going to need. I think this thing could go down for a year, 2 years, and we're not going to see it start coming back up toward, quote, normalcy. It could be 3 or 4 years. Who knows? But it is going to be a mass depopulation event because we're not hunters, we're not farmers. Those skills from 100 plus years ago, those are gone. And people are used to just getting in their car, going to the grocery store and picking up what they want or go to a fast food place or whatever. And they live day to day with their food. The WEF has been clear that they want to depopulate the earth down to 500 million people. Well, that could include war, obviously include famine. And the way to famine is to create supply chain kinks, which they've been doing. And all you've got to do is tank the system, shut credit off, and then nothing moves. Then you're going to find out pretty shortly. Within 3 months, 6 months, uh, who planned and who didn't. And again, I think it's important. One of the things a lot of people forget about, they think they've planned, but you need to be able to protect your position and what you have.
In today's news recap, silver plunges 4.9% after strong U.S. jobs data. The price of precious metals dropped further on Friday after data by the United States Bureau of Labor Statistics revealed that non-farm employment in the country rose in May, going above analysts' projections. The hotter-than-expected reading suggests that the labor market is still able to withstand tight monetary conditions, thus pushing prospects of a summer rate cut further away. During the reported month, the unemployment rate grew to 4%, seemingly offering a mixed picture of the country's labor market. Now we'll show you the best clips of the latest interview, but first make sure you subscribe and turn on notifications so you do not miss out our daily recaps. Enjoy the episode.
The end. I mean, we send billions over there, and billions come back and end up in pockets of probably even legislators. I don't know if it's crazy enough. I mean, it's obviously insane to think like that. But again, the financial system is set up as call it a rape and pillage system, and that's going on for years. I mean, literally several hundred years with fractional reserve banking, and we're at the point now where the math no longer works and the math is going to implode the system. So yeah, they have to cover their tracks. They have to be able to say, well, it wasn't our fault. It wasn't my fault. It was, everything was fine except for World War III. And it's interesting, Putin, and it makes sense that he said this, that now that Britain is sending the arms and going to send the support to be able to operate those systems, now he's saying that any and all British targets are targets. So I mean, it's escalating, and the next 3 to 6 months is going to be crazy. And I say 3 to 6 months because that's leading up to the election, and that's another variable. The mining shares breaking out to the upside. I mean, gold's at new highs. Silver broke above $30. And I did put an article out a couple weeks ago suggesting that this was going to happen. Silver over $30, you saw it get hit, soften and correct a little bit last week, corrected down to what? 30, 20, 25, thereabouts. And then yesterday it was up $1.50 when COMEX was closed, but yet the rest of the world traded. So people woke up yesterday morning to a giant margin call. And that margin call on top of the week before COMEX raised margins in silver. So it was a double whammy for the shorts. And it looks to me like the shorts are going to be taken out. The physical markets have taken over. You can see, $40, $50 premium in Shanghai over both COMEX and London, and a $3 to almost $4 premium in silver. That's over 10%. That is creating arbitrage. And I think the last time I was on and spoke with you, we talked about arbitrage. And that's what's happening, is that the physical inventories in the West are being drained. And I mean, at this point, it's like a heavyweight boxer fighting a lightweight, and the lightweight is paper and the heavyweight is physical. And, physical is moving the market. And then, let's see what the paper shorts can do. They come in, they try to hit it, and they get taken right back up. So it's certainly a losing battle now for the paper shorts, because the more and more they sell, the longs know that they can't lose. The longs know that they control the physical markets, are starting to control the pricing mechanism. So there's no fear in the physical markets that, oh my God, they're going to come in and smash it down again. The smashes have gotten shorter and shorter, shallower and more shallow, and we're going to get to the point where, and I've talked about this for at least 10 years, there is going to be a failure to deliver, and that will be a sight to behold. When that failure to deliver happens, the entire financial system will come down. You'll be looking at, God knows, you could be looking at four-figure silver very quickly. And I always caution, be careful what you wish for, because when the financial markets come down, your way of life will completely change, and it'll go from living the good life to purely survival. Yeah, and I think it's really important uh, to keep in mind the difference in price. I mean, if you can buy silver and have it delivered in the West at $32, and you can turn around and sell it at $36. I mean, you know this very well because you do institutional business. I mean, if there's over a 10% arbitrage, that's going to drain the physical supplies pretty quickly. And I mean, it doesn't take a rocket scientist to figure out, which price is the real price. Is it really 32 or is it really 36? Well, if somebody's willing to pay 36 for it, that's the real price.
What do you think of Bill Holter's take? Do you agree with him? Are we headed towards a huge recession with a dollar collapse and back into a barter economy? Or are we going to just be fine and get good silver prices? Post in the comments section down below your honest opinion and watch this video right here because it's a perfect fit for you. I see you on the other side.